Have you seen the numbers of the Nigerian stock exchange? These numbers are stupendously crazy. But hold up, before you start investing in the stock market because of these numbers, I need you to watch this video to the end. I need you to understand these 5 lessons because without them, your investment money in the stock market might be a disaster. Hi guys, welcome back to my YouTube channel. My name is Aderoke. If this is your first time on this channel, I'm a legal practitioner and I major in capital market operations. What do we do on this channel? We talk about what to invest in, how to invest, and where to put your money for gains in 2026. So let's start with the number one rookie mistakes many people make, which is not having a plan. I find it very disturbing when people message me that they have an X amount of money and they wish to invest in the stock markets. Because investment generally should be a process. It's a personal journey and you shouldn't jump right into investing in stocks. There are preliminary questions you need to ask yourself, preliminary factors, considerations that you have to sit yourself and ask if you are actually ready to invest in the stock market. Number one is that you need to assess your income. Is it sufficient to pay your bills, your recurrent bills? If it is not sufficient, then you have already set out to fail. Number two is that do you have an emergency fund? If you start investing without an emergency fund, you've also set out pay because if any emergency comes on, if you find yourself liquidating your portfolio, whether or not you make any gains, sometimes you might even have to liquidate your portfolio when it is red. Number three thing you need to consider is your risk appetite. You need to ask yourself if your invested or portfolio comes down by 20, 30, or even 50%. Will you be okay waiting for it to regain its value? If your answer is no, then you are better off not investing in the stock market, or at the very least, you should invest in equity mutual fund or ETFs. I made a video last week on this. Please check the description box if you want to know more about equity funds and ETFs. So yes, the one lesson for you in this video is to have a plan, have an investment objective. Another costly mistake that rookies make in the stock market is over diversification. I know, yes, we preach diversification to manage your risks, but when you're investing 100K in like 5 or 6 stocks, then you're already doing too much. Think about it this way. You have 200,000 naira and you invest it in one single stock, one single company. If that company stock goes up by 10%, you already have 10,000 naira gain. Now, think about it another way. You have 100,000 naira, but instead of concentrating that in one single stock or one company, you decided to divide them into 20,000 naira in 5 companies. Except if all of these stocks appreciate by over 10%, you've already lost because number one is that you already pay service charges on all the others. If you invest in one stock, you're paying for a service charge, NGX, CSCS, all of these fees, you're paying just one time. But if you're investing in 5 different stocks, then it means that you are paying these charges 5 separate times. So the second lesson in this video is to avoid over diversification. Yes, diversify your portfolio to manage risks, but don't do too much. The more you invest in a particular thing, the more it appreciates or the more returns you get. Another mistake beginners make in the stock market is what I would describe as over concentration. This is similar to what I just explained, but also very different. Over concentration simply means that your stock portfolio is heavily concentrated in one sector. Think about it, you have 5 stocks in your portfolio, but out of that 5 stocks, 4 are banking stocks. If anything should happen with the banking sector in Nigeria or even outside Nigeria, depending on which market you invest in, then your portfolio, best believe that your portfolio will be significantly down. Again, concentrating your stock portfolio in a particular sector is not necessarily a bad thing. What is bad is doing too much. That is why I said over concentration. Let me give you an example. In the US market, a lot of people are crazy about tech stocks, AI stocks, but then you must be careful by creating a balance. Now we have the gold, silver ETFs going crazy. So you can allocate 60% of your portfolio to the tech AI stocks and then 40% a mixture of consumer goods and ETFs, anything to just absorb any losses from the other sector. So the third piece of advice I have for beginners is to avoid over concentration. Even if the sector is currently booming, going crazy, except you are investing for the short term, do not over concentrate in one sector. The fourth mistake I'm about to identify is very relevant to what is happening in Nigeria, and it is something that always happen when the stock market is rallying. You see a lot of people jump into the market at that point, which is what we call fear of missing out. Oh, people are posting about their gains. Some people have made over 70%. Some people have made this. Some people have made over 1 million in the stock market, and you think that that point when most of the stocks are trading at their all-time high, that is the best time to jump into the market. You are making a mistake. Except you are doing DCA, do not buy stocks when they are trading at their all-time high. What is DCA? DCA simply means dollar cost averaging, which means that you want to start investing consistently in a particular stock. So, for instance, you can decide to invest 100,000 monthly in Zenith Bank. So, which means that the price you buy in 1 month will be different from another month, and over time the cost just average or evens out. So if it is that you are doing, then you are fine. It can go on, because when the stock is trading at a high, you buy. When it is trading at a low, you also buy. Everything comes together to create a balance. But if you are investing occasionally, then do not buy when they are trading at their all-time high, because best believe that the stock market does not move like this. It moves like this, which means that the market always corrects itself before the next bull run. And the last one is investing in stocks without doing your own research. This is a very common mistake in this time and age where we have the internet, we have a lot of us financial coaches, we have various analysts online, especially on Twitter. Don't get me wrong, some of these people are doing a fantastic job, but you have to secure your own personal conviction about the stock, because the metrics the analysts might be looking to evaluate that particular stock might be different from what another person is looking at. Also, sometimes we take risks based on the leadership of a particular company. For instance, I would say invest in First Bank, not because the balance sheet is doing any crazy number, but because I believe in the leadership of Otedola. Why I respect analysts who give reasons for their recommendation. It is not enough for you to recommend a particular stock to me. Tell me the reasons. Tell me your reasons. Let me know if your reasons resonate with mine. If it does, then I will also look into the stock and invest in the stock. But do not invest in any stock simply because it is being hyped online. Do your own research. Know about what the company is doing. Look at their books. Trust me, there are a lot of these stocks on the Nigerian exchange that are rallying up, but fundamentally they are bad stocks. Except you are trading for the short term, they are very risky for the long term. Let's do a short recap of everything that I've spoken about in this video. Number one, plan before you invest. Number two, avoid over diversification. Number three, avoid over concentration. Number four is to avoid fear of missing out, FOMO. Number five is to do your own research before following any analyst recommendation. If you like and enjoyed this video, kindly give us a thumbs up. Also subscribe if you are yet to subscribe. Share to your loved ones. Bye. See you in my next video.